Happy Monday, y'all. Roy May with Bach Realty Group welcoming you to my new series, Monday Market Updates. I'll provide the latest buzz with the Fed, interest rates, or any other pertinent info that my good buddy Mitchell Kleckley over at Pilgrim Mortgage is going to kind of put together for me to share with y'all. So let's go ahead and get going. Is the latest Fed rate hike the last? So in a unanimous decision, the Fed hiked their benchmark Fed fund rates by 25 basis points at their meeting last Wednesday, bringing it to a range from 5 to a quarter to 5.5. The Fed funds rate is the interest rate for overnight borrowing for banks. It's not the same as mortgage rates. So when the Fed hikes that rate, the Fed funds rate, what they're trying to do is slow the economy and curb inflation. Now, this was the Fed's 11th hike since March of last year, though they chose not to hike at their meeting in June to give themselves a little bit more time to assess some incoming data. So what's the bottom line, right? So in his press conference following the meeting, Fed Chair Jerome Powell was non-committal regarding whether the Fed would hike at their next meeting on September 20th. However, he sounded less hawkish, and hawks are policymakers that favor higher interest rates to keep inflation in check. So he's less hawkish, leaving the door open for a possible pause in September after previously signaling that there were 2 hikes left. The Fed will be closely monitoring the economic data before making their rate decision in September, including a few reports that were released after their meeting last week. The first reading of second quarter GDP showed that the economy grew at a stronger than estimated 2.4% annualized rate, while the latest jobless claims figures continue to reflect strength in the labor market. Plus, June's personal consumption expenditures, the PCE, which is the Fed's favored measure of measuring inflation, it provided more evidence that consumer inflation is cooling. So is inflation moving lower step by step? In June's personal consumption expenditures, the PCE I talked about, showed that the headline inflation increased 0.2%, but the year-over-year reading fell from 3.8% all the way down to 3%. And the core PCE, and that strips out volatile food and energy prices, it also rose actually by 0.2% in June. So what's that mean for you and me, though, right? That's what we got to know. So while inflation is still elevated, it's made a big improvement from the 7% peak seen last year. And it's now less than half that amount at the 3% on the headline reading. It welcomes, not only signifies lower costs for some goods and services, but lower inflation also typically helps both mortgage bonds and mortgage rates improve over time. So what are we looking for this week? Look for important updates on the labor sector starting Tuesday, with news on job openings via the JOLTS report for June. Wednesday brings ADP's employment record for July, which measures private payroll, while the latest jobless claims will be reported on Thursday. The biggest headline comes Friday, with July's jobs reports coming from the Bureau of Labor Statistics. And that includes your non-farm payrolls and unemployment data as well, unemployment rates. So what's that all mean to us? I think the most important thing is to remember that the more educated you are in the market and the more you know what's happening with the market, the better you can approach wherever you are in the market, whether that's real estate or not. So if you're a first-time home buyer or you're re-entering the market after a while, or you're an investor, which obviously changes the rates a little bit, it's just good to know where we are, a quick little snapshot, and maybe hopefully get some sort of grasp on where we're going, or if not necessarily a specific number where we're going, but understand the factors that are coming up for you to make informed decisions on what in real estate is the biggest purchase of your life. So that's it for today. I just want to kind of start putting this stuff out so you guys can get a bigger and better picture of the market and what's going on, as opposed to, looking at it from a month-to-month basis. We can kind of break down things that are happening each week and how they're affecting rates, mortgage rates, and really the entire industry. So I hope y'all have a good one. I hope y'all enjoyed it. If you have any questions, don't hesitate to put them in the comments below. And you can always reach out to us at Bach Realty Group if you have any questions about any property or any real estate, or anything just about the market in general, anything we can help with. We're here to do that for you. So thanks so much. And again, if you're actually looking to get in the industry, or looking to enter into the market, and you're looking for a loan officer, Mitchell's one of our preferred lenders over at Pilgrim Mortgage. So I hope you all have a good one. We'll talk to y'all next week.